Hey, what's going on, everybody? We will give it a moment and we'll get going. Hope y'all doing well. Yeah, sorry for running late. Michael had to go, got called in to do something. I was running when he called me, so when I finished that up, came straight here. Sorry, buddy. Had a final shakeout running for my 50K on Sunday, so nothing too crazy. Let's see where we're set to open. SPX sitting at 6,900 right now. Not a shocker. Key whole level. Distribution speculation right at the bottom of our transition zone. So definitely going to be a key spot here for sure. All right, dude, what are you looking at? Can y'all hear me all right? Making sure I'm talking to someone, not myself. Anybody? Anyone? Just leave a comment, please. Let me know you can hear me. Yeah, cool. Thank you, Butch. Thank you very much. All right, cool. Zooming out, looking at SPX. Kind of middle of the range right now over the last, I don't know, month really. A lot of choppy price action. You see it in our volume commands day after day after day. All that good stuff. Looking into the institutional moving averages, right? That's the red and the green line. Whether you believe in that stuff or not, the market pays attention to it. Therefore, we pay attention to it an extent. So yeah, we're above all that good stuff right now. So do with that whatever you want. Yeah, kind of in the middle of yesterday's range. Going to the market trend model. Weekly bullish here. Kind of a new signal higher, right? Our bullish momentum indicator turned off Wednesday into Thursday. No, sorry. This is Thursday. This is Wednesday. This is Tuesday. So turned off Tuesday, Wednesday choppy, Thursday, a little bit of selling throughout the session, filter take buying throughout the session, 52-week highs over lows. So, all that stuff was good to see. The signal is turned on. So our mechanical strategies are permitted to be entering new long positions. So just in the context of a dimmer switch, right, on a swing trade time frame, which is what we like to talk about, right? Exposure, based off the dimmer switch. This is a constructive signal to see right here. Going to SPX, right, full complex, bottom of the transition zone, we can see a 6,900. We're flirting with that level right now. So that means the dimmer switch now needs to come back a little bit, right? If it was all the way up because of the market trend model, now we need to throttle it back because we're flirting. That's what I'm looking for. Flirting with the bottom of the transition zone here at 6,900. We have some out of money call put speculation down here that we can see as well, which, right, generally in a constructive bullish market moving higher, we definitely have all strikes below us in the money call dominated. Not the case right now. So, really, if you look at this, all below spot price, a ton of out of money put speculation. So not ideal to see. Yeah, but 6,900 is going to be a key line in the sand. So very easy level to risk against, very easy level to understand. Yeah, so not a ton else really to say there. Only other thing to note here, right, if you're either new to Gamma Edge, new to the tools, or not familiar with this tool, so it's our dashboard, but we break it up into quartiles, right, based off the distribution of speculation. So the top 25% quartile, right, captures 77% of the distribution. And, looking specifically at that distribution, we know that the next 3 expirations are very critical, which would be today, Monday, Tuesday, and then next Friday, right? So those are all going to be kind of key short-term levels that we need to, or not levels, but key short-term expirations that we need to pay attention to in the structure. Let me go through the SPX game plan, see if I missed anything real quick. We hit on the SPX-A stuff. Feel free to look at that at your own leisure. Just reading the market trend model notes real quick. Yeah, so right, railroad tracks moving higher, new bullish uptrend, typically a 1 to 3 day signal. Yeah, right, but the key theme is not a strong bull here. Yeah, the thing to note here, right, is so this is what we call a tag combo 4 signal, right? It's the first time that bullish momentum indicator starts to move higher again, right? Key gate in our mechanical strategies. Obviously, this signal is the most prone to failure, right? Because it's the first one. However, it also offers the best risk to reward because theoretically, this could be the start of a new uptrend. So, do with that what you want. These signals are back tested. So, right, we're just not saying, right, we just don't throw moving averages on here and be like, oh, look, moving averages crossed. Therefore, all good things. No, we have this back tested. So when we say TC3, TC4, that means something. Documentation in the Gamma Edge lab, Gamma Edge Fast Pass for y'all to go review that if you want to. But yeah, there's a reason that this is a key gate in our swing trading strategy. So, yeah, if you are trading on this signal, keep in mind, right, it's still a kind of a tight distribution between all the moving averages and the cumulative tick itself. So this is very prone to failure. It could fail right within the first hour. So, you kind of need to have your butt in the seat if you're trading this and be kind of cognizant of what is happening. Yeah, so like we were saying, looking at the Delta Balance tool, right, property of options is they are inherently forward-looking due to the nature of future expiration dates. So we can understand how folks are positioned out in time if that kind of jives with today's positioning or if that changes. And so this is exactly what the Delta Balance chart looks at. We can see, looking at the future expirations, today is weak. And then next week, right, the next 4 expirations are trending down, which is not constructed to see at all. So again, not super strong structure here. Exactly what we saw when we looked at the top quartile analysis a little bit ago. Yep, cautionary. 0DT complex, right? 6920, top of the transition zone, top of the DEX transition, top of the drunken sailor range, plus GEX in the day. So that's going to be a very significant level to the upside. By significant, kind of a key goalpost, so it's going to take a lot of, volume, a lot of buying, a lot of gusto from the market to propel us through that level. Now, if we get through that level, then we would want to see a sustained buying via the market trend model, via our intraday volume analysis tools, all that good stuff. But so long as we're in this yellow box, that just means that we're in generally a choppy zone. Right, and the ways that you can better kind of see that using our tools on an intraday basis is our kind of suite of volume analysis tools. So just looking at yesterday's kind of intraday snapshots, right? This is our Vol M tool. What we do is on a 5-minute over 5-minute basis for SPX 0DT volume, we bucket that volume, find the middle point of that volume. That's called a centroid. We plot those centroids throughout the session. You connect those dots, you create trends of those centroids so you can understand what the trend of speculation, this trend of behavior of folks transacting is, both for the call side, which is green, put side, which is red. And right throughout the session, we can kind of get a flavor for, right, is it a trending day higher, trending day lower, choppy, sideways day. And we can also understand kind of where, assuming all else equal, where those centroids are going to trend into the close. And where folks are transacting, that is where price generally goes. Or where folks are not transacting, that is where price is likely not to go, aka premium sellers, all that good stuff. So that's exactly how we use this tool. Another tool that I like is, this is just a derivative of the Vol M tool. So these are the centroids, but the spaghetti model kind of breaks out that centroid into more granular views to understand where, say, C50 is an example, which is this is the red line. That stands for 50% of all call speculation is from this line and below. And so same thing like C10, call speculation this line and below. So again, this just gives us a flavor for kind of how the masses are speculating. And right, we just kind of slice and dice it based off, 10%, 20, 30, 40, all the way up to 50. And so this is a super helpful tool because you can kind of see where we start to flatten out. The puts are trending higher, calls are flattening out. So, really, the puts are chasing price higher, but at the same time, right, call speculators are not really speculating higher. We saw that on a volume chart as well. And so, right, this is a good sign that's saying, yes, we're rallying, but like the odds of us getting above this band is not likely. Yes, a few days ago we did because there was a news event, and you can't predict news events. And so that's just going to happen. But, day in and day out, you need to have a repeatable process, and a process built around news events is not repeatable. Don't care what people say. So this is the way that we like to approach it. And so, yeah, most days over the last 2 weeks has had a characteristic like this, either to the downside or the upside, where we have a very flat call or put speculation. And so that's just a very good indication why, yes, we could be getting a trending move that way, but it's going to run out of steam unless we continue to get speculation in that direction. So hopefully that makes sense. If you guys have questions on that, let me know, but that's what we'll be looking for again today. Going back to, let me pull this up real quick. So we have 6905, right? Key psychological level. Getting back here, so 75 to the downside, we have 69.20, 69.15 to the upside. $50, yeah. Yeah, so we got a lot of literature, Paul wrote a ton on, the various levels, how we approach that. You guys can feel free to run through that. I am not going to do that here. But I mean, just suffice to say, we're right where the key goalposts are at. So 20 to the upside, once we get to kind of the 80, 75 to the downside, right? 68.50, that's going to be a key strike to the downside if we do see some downside pressure. Just looking at the distribution and speculation, this is negative GEX on the day. So the max short-term put convexity level. So, if we do get a meltdown at that level, that may be a key spot where we see some kind of monetization event because, just given how much is sitting down there. And then to the upside, right, we want to see 69.20 break free first. Going back to this, right, just right in the middle of the range. First step, to the upside or the downside really is this pre-market range. Very well defined here. Yeah, I don't have a ton else to say right here. Those are going to be good goalposts for the day. You can see IWM seeing weakness right now. It's below its pre-market low. Pretty nasty sell-off there. I think I forgot, right? Going to the swing market, the swing game plan. Couple things we do right. So we put out a couple of different watch lists throughout prior day and, pre-market. So this is a scan. Well, what we're doing is we're combining kind of all of our bullish scans that we like to look at. For example, newly call dominated, newly bullish in the right-hand plane. Newly, kind of call dominated from a charm perspective, or, part of our P2P scan. So they should just, suffice to say, like favorable stocks that are newly call dominated stocks generally should move sideways to higher. So this is just a good population to look at, especially in the context, thousands of stocks out there. So, a complaint we get from a lot of swing traders is how do we make our watch list more focused? This is one way to do that. Another way we do that is we produce these scatter plots. What these scatter plots do is help us visualize the stocks in terms of, I call it a risk to reward. These are just key levels, right? P trans and plus GEX. Basically, it's what our P trans plus GEX strategy is based off of, which kind of underpins everything we do here at Gamma Edge. That strategy in and by itself proves out that what we're kind of saying does have edge to it. But anyways, right, we have over here this strike zone blocks, which is this green box I draw every day. This just has favorable risk to reward. We have distance to P trans on the x-axis, right, which is our key upside acceleration zone, and on the y-axis we have distance to plus GEX. So these stocks over here, Corning, GLW as an example, has 6.5% upside, 2.5%, 3% downsides, 2 to 1, not bad. The takeaway here is there's just not a ton of stocks with really good risk reward today. We have a ton of stocks down here that are, close to plus GEX, a little bit further from P-Trans. So, that's just not super favorable. Anything down here, not really that interested in. Ideally, you already have a position in it, and you're kind of just waiting to capture those profits. But not a ton that I can see that looks super interesting. Texas Instruments right at its P-Trans level. So maybe, it moves through P-Trans, catch that for a nice trade higher. Starbucks, kind of 4% upside through 2.5% downside. So not amazing, but you guys get the deal. These are all call dominated again. Put dominated stocks, same thing. If anything, these stocks you just don't want on your long watch list. This is our bellwether names. So, these are the Mag 7, JPM, Visa, Oracle, things like that. Again, nothing super interesting. We have Google here. Keep in mind, though, Google is neither call nor put dominated. The reason why it didn't show up on our call dominated scatter plot. So can still trade that, if it's making a nice move. But, just keep in mind, it's neither call nor put dominated. Looking at Google right now. Wow, Microsoft, nice move to start. Where is Google? Oh, Google's right here. Yeah, so let's see if Google, right, can get above the opening print, can get above, what is that, pre-market high? Maybe it would be interesting there. Apple, nasty. Tesla, nothing great. NVIDIA, Microsoft, Palantir. Yeah, so Palantir, Microsoft is showing some strength. They're just above their pre-market high. That's what I mean. Intel. So Intel got smoked on its earnings release. Keep in mind, there's probably going to be a lot of change of positioning today after that happens. So just keep that in mind. Overhead, not a ton of call speculation happening at all. So that's not great to see. 46 key downside level below the transition zone. Transition zone is huge and wide right now. So Intel doesn't look very good from a long perspective here. Needs to digest the gains. Structure needs to kind of recoup itself, reposition itself. So this name's not very interesting right now. Then we look at the sector ETFs, right? So you can get a flavor of how that distribution looks. Again, we can look here. We can quickly see, just a couple of them are call dominated. A lot of them are kind of neither nor call nor put dominated. Please check your DMs. I sent you one yesterday. Let me know if you guys have any other questions. Hopefully that was helpful. So SPX, right? Still flirting that 6,900 level. IWM still pretty weak here. QQQ. So not a ton. Just kind of not a great price action right now. Seeing some filter tick selling coming in, so definitely, a little bit of selling right now. Oh. All right, cool. We've been on here 20 minutes, not seeing any other questions flow through. So if you guys have them, feel free to drop in the Discord. You can post them on Twitter or whatever. Comment here. We can get back to my YouTube as well, so it doesn't matter. A lot of places to catch us. The one thing I'll note is go to GameEdge.us, go to free courses, GameEdge FastPass right here. This is our entire education platform that we built in Notion. We give it away for free, so everything a paid member gets. That's how to use our tools, strategies, frameworks, everything in here for you. Yes, it's going to take a little bit of reading, a little bit of watching from your part, but we have hundreds of traders that can attest that it's worth your while to go through and learn this stuff, right? Because options markets are not going to be smaller; they're only going to get bigger. Their importance to modern market structure is just going to get even more important. So, probably worth your time to learn this stuff. No, you don't have to trade options to benefit from this, but just understanding how folks are positioned in the options markets can give you a good understanding of what speculators think about the name. And then from there, if you want to execute through shares or whatever, up to you. So with that, you all have a good day, a good weekend. And keep in mind, if you're in the path of the winter storm, be prepared. If you don't know, then you're basically in the eastern half of America, from Kansas to Dallas on over and up, to the EC, Boston, all that good stuff. Probably going to get some form of rain, sleet, snow. So make sure you are prepared for that. And with that, you guys have a good day.